there is no question that it's rigged. There's no
Mhm.
question about it. It's controlled, it's manipulated. So if you know that, something is rigged, you probably wouldn't go into it blinded and, just throw your money into something that you know nothing about. You would probably want to increase your knowledge about the situation, right? And
You are listening to 5 a.m. podcast. Your morning motivation starts here.
Good morning, friends, and welcome to the 5 a.m. podcast. I'm your host, Michael Clausen, and today we are taking a deep dive into a topic that affects every single one of us, but is often shrouded in complexity and that insider jargon. We're talking financial freedom. Our guest today is a man who's been behind that velvet rope and probably a curtain or two. He's spent years at the highest level of global finance in firms like Merrill Lynch and Citigroup, seeing exactly how the big guys play the game. But instead of staying in the penthouse in the ivory tower, he chose to walk down to the hoi polloi and bring those secrets to the rest of us. Jaden Sterling is a visionary, an author, and he is the CEO of Sterling Stock Picker, an app that I've been using this month. His mission is simple but radical: to disrupt Wall Street and empower Main Street. He's helping everyday investors take back control of their futures by blending data-driven AI technology with something most financial advisors ignore, and that is intuition and personal value. So whether you're a seasoned trader or someone who has been too intimidated to even open a brokerage account, today's conversation is going to change the way you look at money. So please help me welcoming to the 5 a.m. podcast, Jaden Sterling. Jaden, welcome to the show.
well, thank you, Michael. That was a fantastic introduction. I appreciate that.
Thank you. Thank you. I like to get some good information into that introduction and let our friends who are listening know who we're going to be having a conversation with. And as I've been apt to say, it's like you and I are sitting down at the diner having maybe a coffee, tea, and lemon meringue pie, perhaps. And as you do in a diner, you eavesdrop on the people behind you. So let's listen in, ladies and gentlemen. So, Jaden, we're going to go back to the 14-year-old you, and that you had this vision even back then of being able to teach people about money. So what was it about wealth that really captured your imagination and intention so early in life?
Yeah, well, let's talk about that. And by the way, lemon meringue is my favorite. So
Good
you're bang on there.
choice. Yeah.
Actually, what happened was when I was 14, I had an epiphany, and it was prompted by a really kind of surreal situation. I was in my mother's townhome, came down the stairs, and in front of me was our dining room table, and on that table was a big boom box. Remember back in the day, the big boom
Yes,
box, and
that's right.
and in that box was a cassette, and the cassette was Wayne Dyer speaking from stage. Now, what was fascinating is that no one was home, but yet this boombox was playing this cassette. So I found myself standing in front of it, transfixed, literally, like just zoning in on this message. And in that moment, I felt three things, three distinct things. And either they were downloaded to me by a higher power, or they came from inside. I'm not to this day sure, but this is what I am sure about. I was told, or I knew that I'd be speaking on stages around the world, just like Wayne Dyer did, but I'd be speaking about money, specifically teaching people how to be empowered by money, not enslaved by it. And lastly, I was told that I'd be teaching from personal experience, not from a book I read or course that I took.
Wow.
So can you imagine age 14, your whole life purpose is downloaded to you? And you know what, Michael? I just followed it. I went to school at American University, studied finance. After that, worked on Wall Street for the decade of the 90s, learning about money, not so much from the brokerage firms, but most importantly from my multimillionaire clients. That's where I really learned about money and how to have financial independence and financial freedom. And I'm sure during the course of our conversation, I'll share some of that with your listeners. So it was profound, it was meaningful, and it was easy. Like I just followed it my entire life. And that's how I have created what I've created, which is the platform and mentorship, things like that.
Oh, yeah, that's great. Well, and it has been often said on this show, we're created by a creator to be creators. And we and coming from that Christian perspective, God's speaking to everyone he's created, hoping someone's going to pick up the mantle and say, I will run with that vision. So, very clearly, you ran with that vision that you had, and you got to work with the Titans of Wall Street. Was there, say, a big or the biggest myth that the financial industry sells to the public that actually keeps them dependent on big institutions?
Yeah, I mean, you've hit a couple really valid points there. Dependency is key. That's why there's often talk in acronyms and very high level finance terms that frankly don't make a lot of sense, but it's to confuse people and it's to keep people dependent on brokerage firms, bankers, things of that nature. The biggest myth that was taught to me early on in my career, although I didn't know it was a myth at the time, I've learned since, is that diversification is so important, right? We hear this all the time, diversify, diversify. What's important is what I have learned over these last this summer will be 40 years I've been in the industry, is that diversifying your assets is important, to have money in stocks, to have money in real estate, to have money maybe in a business venture that you're interested in or some type of entrepreneurship adventure. And that is key, not so much diversifying within an asset class. Because I noticed, when my clients came in, my multimillionaire clients, they had literally a handful of stocks, five, six, at the most eight different companies that they owned. And this is in the early 90s when multi-millions was actually worth a lot of money
Yeah,
back then.
right.
So I would ask every single one of them, how did you build this portfolio? And I'd hear things like, I inherited these stocks, or every month I just added to, whenever I had extra money, I just bought more and more shares, didn't really care what the stock did. But over the years, it compounded. And, these are companies like IBM and John Deere, some of the really big names back then that performed very, very well. It opened my eyes to, well, this is strange because the brokerage firm is telling me to sell these stocks and buy these folks mutual funds, package products, managed money, treasury, CDs, all this other stuff. And what I realized was after I ran the numbers, after a few years of doing this, I thought, my clients would have been so much better off if they had just held on to those stocks.
Yeah.
But there's no money in it for the industry. The money is when cash is brought in, when a sale happens. It's transaction based. It's actually called velocity. The industry tracks how much money they make off of clients, not for clients. So
Interesting.
it is. It's still back. This was back in the 90s. To this day, it still works the same way. So when we start to break out, like no one's ever become a millionaire going to a broker. It's never happened. It just doesn't happen because it's not set up that way. It's set up to, again, make money off of people. So I started following what my clients did. I just thought, all right, well, I'll pick a stock. It happened to be our parent company at the time. It tripled during the 90s. I started out with $70,000 in that stock. Every month I just added to it and it compounded to just under $1 million by the time I hit 30. So Michael, I was like, wow, I'm 30 years old, I wasn't married at the time. I had little or no debt. I thought, this is a time where I can really get out of the industry and start mentoring people in finances.
Wow. And so as you're talking, of course, I was thinking about my experience and my appreciation and affinity for stock market trades and finding that diamond in the rough and, reading One Up on Wall Street and those other books, lots of books. Of course, my favorite book, Confessions of a Stock Operator. I'm not sure if you're familiar with that one. It's an older book, but what a great book that was. And then, of course, there's the movies, Wall Street, Glengarry, what was that? Glenn Ross, Glengarry
Yep.
Glenn Ross, I think was one, and A Wolf of Wall Street, but of course, Boiler Room, and then The Big Short. How did these movies over the years impact your view of your career and did that play a role in who you are today?
My career was only through the 90s,
Okay,
and a few of the movies you mentioned hadn't even come out yet.
that's right. Yeah,
But I was just really focused on learning everything I could about money because I knew eventually I'd be teaching about it. And frankly, I actually started my mentorship while I was still a broker at Merrill Lynch. I just hosted weekend workshops every weekend and invited people to come and I would teach, about certain type of investments and how they worked. And so I started to learn how to access people's consciousness, understanding,
okay.
how
Yeah,
to say things in a way that it could really land for someone. And I feel like that's when I developed a superpower of simplifying the complicated. I learned
right.
just to bring everything right down to easy speak where nothing was confusing, and if something was, I would learn a way to say it so that it would land for someone, and then they can start taking action with that idea. So that was, the movies they're interesting, they're hype. I've watched many of the ones that you mentioned.
Yeah,
But a lot of that is not so much real life situation. It's always amped up in order to interest people in watching a movie. But when you
yeah,
talk about real life money, it's pretty simple and, dare I say, boring at times, like just
yes,
saving money, developing good money practices. I think now more than ever today, it's like learning how to live within one's means is very important. There's just so much money that's been accumulated on credit cards, lines of credit. People have used their home equity as like a source of funds to borrow against. And I just think it's going to take some real understanding about money and finances to change certain behaviors for folks.
yeah. Yeah, that makes a lot of sense too. In kind of getting away from the spin, many people would feel like the game is rigged against the small investor, and you were clearly living out your vision all those years doing those workshops and the weekend training. Is this idea that the game being rigged, is that a mindset trap, or is there a fundamental truth to it that we need to navigate?
There is no question that it's rigged. There's no question about it. It's controlled, it's manipulated. Whatever word you want to use that is absolutely the case. So, but to know that means that you can work around it. So if you know that, something is rigged, you probably wouldn't go into it blinded and just throw your money into something that you know nothing about. You would probably want to increase your knowledge about the situation, right? And about money and how it works, and, frankly, for a lot of us, our first introduction to money is through credit cards. I remember at 18, when I went to sign up for my classes at American University, the very last table was a credit card company. They're like, okay, here you go. Here's your $500 credit card limit. And I'm like, what? I don't have a job. I'd never heard of a credit card before. I didn't know how it worked. And I'm pretty competitive, Michael, so I just went out and charged that thing up as fast as I could, and
Yes.
and then I learned, wow, my minimum payment wasn't even covering the interest expense on that card. So then I had this compounded interest effect happening. It was a disaster because interest rates were high during that time. So I had to learn to rein in spending, to only spend money that I have. And to this day, I don't have a credit card. I don't use them. I don't like being in that system. I've done everything I can to extricate myself from banks and credit card companies, but it hasn't been easy. So I think if someone wants to live this type of lifestyle, financially free, you have to be really radical in your action and in your thinking and start taking the steps that get you out of the systems. That's paying off debt, doing your best to distance yourself from easy, fast credit because there's always a cost to it. And not only is there a cost to it, but then there's a lever that the bank or the credit card company pulls, and that's called collateral because they want you to put something up for that line of credit or that mortgage or what have you. And that's when it can get, if things go south for someone for a period of time, that's when, it can not be the best situation. We all understand how things like that work, but I think people are too quick to jump on credit, to jump on taking on debt. Whereas, I think there's a real opportunity for people to do it differently. I know I am. I just bought a investment property recently, and I self-funded it. I self-funded the acquisition as well as the improvements to the property. I'm not interested in dealing with banks anymore. I think it's really important to be radical in your thinking because that's where it starts first, like just opening your mind up to, oh, right, there is a different way, isn't there?
Yeah. Wow.
Does that make
That's
sense?
yeah, that's really good. And I'm sure there's a lot of people listening who are like, you got to help me out, man, because I want to get rid of the bank influence in my life as well. But we'll get there. But you do talk about aligning money with purpose. How does an investor actually bridge the gap between their bank account and their personal values?
Great question, by the way. We created on our platform a search engine aligned with someone's two things, their ability to take risk and their personal values. And I think we're the only stock platform, dare I say, in the world that has done this kind of thing because it took me months to correlate every sector and industry with a personal value. And we have like 32 in our system. So there's a correlation between that. And then as someone lands on our platform, they just say, okay, my top 3 or 5 values are, they input them. And then the software knows to only show them companies that are aligned with their personal values. It's kind of like, people say put your money where your mouth is. Well, we believe put your stocks where your values are, invest where your values are. So, for example, if someone really values health and well being, they will not see McDonald's or Pepsi Cola on our platform. It just won't show up for them.
Wow, that's cool. I like that. And I have used your platform, signed up for it. Can you give us the link to that and how people can also get in touch with you online?
Yeah, it's the platform is called sterlingstockpicker.com. Sterling is my last name and it sounds like sterling silver.
Yeah,
It's spelled the same as sterling silver. And then of course I can be reached through the platform as well, for
right.
sure.
And it is a great platform. I was impressed to see the values indicator where people can put in what they're for, what they're not for. And can you talk a little bit because it uses artificial intelligence, or as I call automated intelligence? Can you talk a little bit about the engine behind what this program is actually going to do for the person maybe looking for something to invest in or going beyond that?
Yeah, like we created this 9 years ago when AI wasn't the thing that it is today. So we set out to, I was basically telling my partners, look, if we can create software to help a novice investor feel like an expert, we'd be on to something. And we knew our algorithm would have to really do a lot of number crunching, a lot of analytical work on in terms of the technical chart patterns, so that it would send out. I'm sure you've seen our North Star ranking. That's
Yeah,
the real center of the software, and our North Star ranking shows whether a stock is a sell, hold, buy, or strong buy. And for the most part, our 5-star stocks, when you hit the purchase button on a 5-star stock through, and we are working on people be able to buy through our platform. That's going to roll out in the second quarter of the year. So we're very close on that. We're excited about that. But you can pretty much be assured that, the financials have been looked at, the financial health of the company, the technicals, the fundamentals of the stock have been rigorously looked at. And if it makes our 5-star coveted 5-star ranking, it's a strong buy. And someone can feel very confident buying a stock that's 5 stars in our system, even if they know like nothing about investing.
right. Yeah, and that guidance is integral and also knowing that the guidance is not biased for somebody else's benefit. And so
Correct.
I've got to ask you then because there's two things in that. Number one would be the market noise. And so people to me, the market noise is the broker. It's the ads on TV. It's a wide variety of things. But can you talk a little bit about how does a regular person then actually filter out that market noise from the actual signal that they should be following?
Man, that is such a good question, and I don't get that asked very often. Heck, how does anyone filter out the noise that they're hearing all day long about everything anyway?
Yeah, right.
It's just like
You need a
so
North Star.
important. Yeah, so important to be focused, disciplined with your mindset. Really only turn your attention to those things that are going to enhance your life. I just Michael, I don't know about you, but I have found, every commercial, every ad on YouTube, everything, videos that pop up on social media, like with AI, to your point, we don't know what's real and what's not.
True.
They're so good with the technology these days. I mean, it took me a while. At one point, I was watching a video. It was some guy on YouTube talking about silver. And eventually I realized, oh my God, he is not even real. So we live in a really fascinating time. I call that fascinating because I just think it's amazing to be alive right now with not only all the opportunity that AI presents, but all the challenges that it brings too, all the noise, all the distraction. And I think now more than ever, like we have to be like it takes someone to be disciplined to wake up at 5 a.m., right? Like that.
It does.
I don't currently have that in my life right now. But it also takes discipline to really be cautious of what you're allowing into your senses, like what you see, what you hear, the things that you're eating. I mean, all senses are involved here. And I think it's just really important to only turn your attention to those things that are going to improve or enhance your life. So, did I answer your question
Yeah,
about?
absolutely.
Okay.
Yeah. Yeah, and that leads me into my next question then, and the North Star point that you have even in your software. But what was that breaking point when you were in the investment houses, the offices, and on the phones and the desk? There was that breaking point where you knew that you had to build your own path. Can you talk about that?
Yeah, so I spent the decade of the 90s in the industry. And like I mentioned, I just heard so many things that were not at all true, that did not relate to building wealth. So by the time I had enough of it, because I invested in one stock and it grew to become a small fortune, that was my freedom right there. That showed me, okay, this is my exit out of this industry because I invested not how they told me to invest, but how my clients showed me how to invest. So once I got out, I realized that like I mentioned, I was 30 years old, had enough money to sustain myself for a very long time, and started putting together courses mentally. I started thinking about how can I teach this freedom? And there was a piece for me missing at the time, and that was real estate, because I felt like there was this other huge asset class that had a lot to do with financial freedom. So I dove into real estate, and I dove in specifically, I believe in the philosophy, do well by doing good. So I started buying rundown apartment buildings, improving them and turning them into affordable housing. And I did about 125 of these over the course of 7 years, built a $12.5 million business. And at that point, I felt like, okay, I know a lot about stocks and I know a lot about real estate. So now I can take this knowledge and begin to share it. And I did. I would share it. I would have people come to my office and, they'd sit there and I would just like give them these pearls of wisdom and all for nothing, didn't charge a penny. And Michael, what do you think they did with that information?
Yeah, nothing.
Yeah, nothing. Exactly. So then I realized, oh, I shouldn't be charging to benefit me. I should be charging to have someone benefiting themselves, being actually interested in what I was sharing. So then I started formalizing my teaching, and that was back in 2008. And I've been teaching ever since as a money mentor.
Right. So now most people, well, I don't want to say most, some people, maybe more than not, they would perhaps view investing as math. But you've spoken about the role of intuition. So, how do you balance cold hard data with that gut feeling about a company? And I know I have used the intuition and gut feeling myself.
Such a good question. So I started that with real estate, and I trained my body. And most of us can do this if you practice it. You can train your body to tell you what's a yes or a no. Like the body is a really good feedback mechanism.
Yes.
So I would, before I looked at any financials of a building or any numbers on a deal, I would stand in front of a building and I would just get grounded and I would ask, is this building for me? And if my body leaned forward, that was my yes. If my body leaned back, that was my no. So if I got the physical yes, this building is for you, then I would dive into the numbers and, do all the calculations and figure out how to buy it. So that's what I did with real estate. With stocks, I do the exact same thing. But what I do is I write the name of the company down on a piece of paper. And I might have 3 or 4 papers on my desk. I can't see the name of the company. And I have in front of me yes and no. And I pick up a piece of paper. I don't know the ticker symbol. I don't know the name of the company. But wherever I'm guided to place that piece of paper in front of my yes or my no is what I do. And that tells me right there, okay, XYZ company, if it's in the yes pile, then I purchase it. Does it work out perfect every time? No, it doesn't. But what I have found is I've tracked this 80% of the time it works out, and which is one of the highest percentages in any type of investment strategy. When you're hitting winners 80% of the time, that's a really good strategy.
Yeah. Well, that's really good. And that asking asking our body if things are a yes or no, very critical piece of the puzzle, not just for investments, but even what vitamins to take or what food to eat, different things
Absolutely.
like that.
Muscle testing, and most people relate it to that, but they forget that they can relate it to money as well. So yeah,
Yeah.
I agree with you.
Thanks for watching the show. Just a reminder that you can get all of our resources, other episodes, and read our blog posts at 5ampodcast.com. It's very intuitive to be able to use this created temple that we inhabit
Absolutely.
to the best of our abilities. And as I think I said it already, so like we're created by a creator to be creators, which means we have
I like
tools
that.
to be fruitful and multiply with. We weren't given an assignment without the tools. And now I wanted to, as I was preparing for this, I thought about the that whole GameStop and AMC theaters that we saw just a few years ago that was really Main Street being more than just the fly in the ointment of Wall Street. Can you talk about the power that the individual has for their own benefit, but also for a larger purpose in their investing?
Yeah. Well, you've heard the phrase y- you dictate policy by the dollars that you spend, right? How you spend your money. And this is proven to us over and over and over again. When we say no to something or boycott something, that forces the powers to be to make a change. So what happened was in that particular instance, we don't really fully know the
Yes,
truth behind
right.
that.
Yeah.
The story is that there was a particular guy who was really good stock analyst. Like he really knew the numbers on a company, and I don't know how he got his initial seed money to buy shares, but he bought a whole bunch of shares of GameStop and then posted social media, these cryptic images. And then it left everyone else to interpret those images and then go into the stock as well. There was like a buying frenzy of
Hmm.
individuals in this space, in this GameStop space. And it was fascinating to watch. And that is a real type of thing when individuals move through, because there are a lot more individual investors than there are corporate investors. But people focus on corporate institutional money a lot more because they have bigger pools of money to draw from. But nevertheless, I think when you look at individuals who can really get behind a cause or excited about an opportunity, they'll tend to bid up stock. GameStop and AMC, especially AMC. I don't know about you, but I recently went to an AMC theater. It was, in my opinion, run down. Staff was terrible. I had a horrible experience. I will never go back to an AMC theater, and I'm not surprised the stock is sitting at $1.
Yeah.
Like they're just losing money. It's just not a sustainable model. I think when people realize that they vote with their dollars, that they can actually make a difference with their dollars, an investment in a way that feels good to them or that's meaningful to someone, not what we're told to be interested in, because that happens a lot. There's a lot of every brokerage firm has what's called and this is another insider secret I'll share. Every brokerage firm has what's called a black account. It's stock that they own that they want to unload and sell it to their clients. And that's what they do. They might have a loss in the stock. They just want to get rid of it, whatever. Then they'll put out a research report why everyone should be buying the stock when maybe it's not the greatest thing. So to your point, when you're talking about our platform, we are not biased at all. We do not accept any financial incentive to push stock of a company. We are truly 100% transparent. We're a platform of the people for the people. Like even when we went through our capital raise, we raised almost $1 million early on to build out our platform. When we went into AI and machine learning, it's very expensive to do that. And I said to my team and investors, I said, I'm not approaching any banks, any institutional investors. This software is by the people for the people. And when we go to our exit strategy, we have 32 investors that we are going to make sure they X their investment. So we've been really clear about that. Like I do my best to ward off institutional investors and banks and brokerages because they're constantly reaching out to us. Little less frequently now because the markets are down a bit, but when the markets are in an upswing, I'm always getting inundated with "Hey, we want to buy your company or what can we invest in it?" And it's like, nope, nope, don't bother.
Yes. Before we hit record, ladies and gentlemen, we were talking about being young and having an interest in stocks. And I had a good friend in 10th grade, and he and I would constantly read over the ticker symbols in the newspaper way back in the day.
Nice.
So, how can a parent better prepare their upcoming generation for financial independence the way that schools aren't? But we could also say if there's some young ones listening and they know their parents need some help, unbiased help. Can you talk a little bit about that?
Yeah, like I remember when I met my wife, the kids were back then 6 and 8 years old. And I would at the dinner table every night talk about stocks. I just started very slowly, talking about companies and how stocks are set up and how it works. And kids love money. Like what kid doesn't, right? Like they're so interested in it. So I just start with your kids to educate them about being an owner rather than a debtor. That's step one, right? Like really giving them good advice, which will extend out through their whole life. So I think that's the first thing. Demystify this for kids. Kids are so smart; they pick up so fast. And it's interesting. So now, fast forward today, my stepson is 24 years old, graduating college. Basically, put himself through school from his investment portfolio. Like it was remarkable to watch him because once it got ingrained in him, all his extra money went into stocks, and he's such a smart kid. Like it didn't take much for him to start growing his assets and put himself through school, which was pretty awesome. I mean, of course, we've helped with, living expenses and things like that. But for the most part, it was all him. And we're so proud of him. And our daughter is the same. She's been working on saving her money. She's a little less interested in our son, but I think that's step number one is just start the conversation, start talking about it. It's interesting. Actually, my grandfather was president of a bank, Maryland National Bank in
Is
Baltimore,
that right?
Maryland.
Okay.
And my father worked for a mortgage broker company. He was like manager of a mortgage, but they never talked about money ever. Everything I learned was like on my own, getting information, finding things out. It was never, I just wish it would have been introduced at the dinner table like I did for the kids in my life. So I think that's step number one is introduce it in a way that's just real easy, and you can even start with the example of like, pick a kid's favorite restaurant and you can, let's say Chuck E. Cheese. I don't know. Is that still around? I'm not sure, but Chuck E. Cheese. And so you can talk about how there are people who go and pay money to Chuck E. Cheese to have that experience, that dining experience, right? Those are the spenders. Those are people who are doing that. And then there are people who work for Chuck E. Cheese, they're actually flipping the burgers, and those are the workers, and those are in the highest tax bracket because the highest majority of their income goes to taxes. So those are the workers, and their feet hurt at the end of the day, right? And their clothes smell bad. So then you get the owner of that franchise. The owner is benefiting from the customers coming in and from the workers flipping the burgers. But they had to put money in the game in order to own that franchise. Then there's a whole nother asset class called investor, where as long as the company is publicly traded and you invest your dollars in the company and they do well, they make a profit, they grow, things like that, you're going to be rewarded as that company grows, and you don't have to go there and spend any money, and you don't have to flip any burgers. So which one would you be most interested in participating in, right? And for the most part, kids are going to say, I want to be an investor. Okay, great. And then you just continue the conversation.
That's great information, Jaden, and what a great conversation we've had so far. Our time is drawing to a close, so thank you for being authentic and transparent about behind the curtain and in the home and at the dinner table. Thank you so much for being here.
Thank you, Michael, for having me. I really appreciate it. And I look forward to coming back on your show.
Yes, absolutely. Well, what a master class. I hope that you were taking notes because Jaden just gave us the blueprint from moving from a debtor mindset to an owner mindset. Please take a moment, share this with a friend that needs to make that move. Now, I loved his advice about the dinner table, teaching that next generation that they don't have to flip the burgers. They can actually own the franchise or at least be invested in it. If Jaden's mission to align your investments with your personal values resonates with you, don't stay on the sidelines. It's time to move from guessing to knowing. As we discussed, you don't need to rely on biased recommendations from your broker like I got inundated with, as we talked about. You can use the same tools that I now have been testing for the last month. Jaden's been incredibly generous with our 5 a.m. community. You can claim a 30-day risk-free trial and access exclusive discounts by heading over to stockpicker.com/VIP. You can take control of your financial journey today and start investing in companies that you actually believe in and that will help your family for generations to come, in my opinion. As always, friends, please seize your day. Enjoy those sunrises and sunsets and all those beautiful adventures in between. I'm Michael Clausen, and I will see you next time on the 5 a.m. podcast.
Thanks for watching the show. Just a reminder that you can get all of our resources, other episodes, and read our blog posts at 5ampodcast.com.